about a lot to do with the short squeezes and individual names. And oh, wait, let me lower this guy. Cork it, Squawk Box. All right, so what's been interesting over the last couple of days, okay? I mean, we're hearing a lot about bubbles and we're hearing a lot about, it's not normal and stuff like that. And if we were seeing the type of price action in some of the leaders, in some of the bigger name companies, not the heavily shorted names that we're seeing, a lot of people, like the more experienced traders, were happy to see a name like Etsy, for example, sell off that Musk tweet rather than go parabolic. And the point I'm trying to make is if we were seeing the type of price action we're seeing GameStop and some of these other heavily shorted garbage names in some key names, you would have a lot more people concerned. Okay. But what's going on, what's interesting to me, what's the most fascinating thing that's going on here. Okay. And we've been talking about this for quite a while now, right? Let me pull up private Twitter and you guys will see. Okay, we've been talking about this as almost like one of the last few legs bulls have to stand on for a reason why the buy the dip mentality wouldn't disappear, right? You got hedge funds who, for all the good reasons, okay, for the same reasons you and I see a lot of, toppy price action, overextended price action in a lot of different names, right? For the same reasons, hedge funds have tried to get cute, right? And front run a market pull, okay? By doing so, everybody thinks they look at this chart and as soon as they hear news that a hedge fund got long something, they discredit this indicator, okay? This just tells us as a whole, okay, hedge funds are net short as a whole, all right? And what a lot of you know already, and don't need me to tell you, these hedge funds, they don't look to short quality names, okay? They're not looking to short the best names out there just because they've appreciated in price, maybe a little too much. They look for some of the worst names out there, right? And they build these ginormous short positions in them, right? Individual names. GameStop is a perfect example. And what's happened over, I would have to say, since the 2008 debacle, 2009, hedge funds have been able to live stress-free in names like a GameStop and never survive any significant type of squeeze because they would just come into that squeeze and hammer it back down again. Okay. And if you remember, we discussed and been spending a lot of time, especially since the election, of how the climate has changed out in the market right now. And the big difference is a lot of the names, okay, that have been ignored for years. I'm talking about years, okay? Nobody had an interest in ever going along any of these names. And you had some of these hedge funds build massive positions on the short side in these things, okay? What changed post-election was that these names started to find some interest, right? Whether it's the Robinhood crowd, the Wall Street Bets crowd, sweepers front running or joining the party with the Wall Street Bets crowd and Robinhood crowd, whatever it may be. Okay, to me, it's irrelevant for what's going on right now. Okay, but what's changed is these shorts now have a problem on their hands. They've built massive positions in these things, right? You had outfits and syndicates like Citron would come out publicly, okay, off a 1 week rally in a name and tout their short position and then watch the stock roll over and crash, right? And they'd print money. You guys remember that? It would make everybody sick, right? They would just come out and be like, oh, we're short this. This is a piece of garbage. It's going to zero. It's $80 a share now, but it's going to zero. Right? Outrageous claims, outrageous price targets, all these short outfits. And, they would be short the stock and they would hammer it down. Okay? This market always, right? When you get cocky, you get away with it. You get away with it, but this market will always teach you a lesson and bite you in the ass. And what a lot of these short players are going to learn now, okay, kind of when I got into the business, that what you never knew who was short, they never wanted to tell you that they were short because of these reasons, okay? We're going to go back to that again because now you have a retail crowd who's been fed money from the government, right, stimulus, and the Fed, who've been able to overrun some of these hedge funds who are short out to the eyeballs, right? And with the help of the option markets and the market makers hedging, it's just been too powerful of a force for them. All right, so that's big picture what's taking place here. Okay, you talk about complacency. There's been complacency in these short outfits and hedge funds in these names for ages. And they could just pump their short position ad nauseum anytime they wanted any more weakness or to destroy any rally in the stock they were short. And that's all gone up, or as we speak, going up in flames. All right. So bigger picture wise though, okay, what does this lead to, right? Does this have an effect on the overall market is the question, okay? And what's really interesting here, what's going on in the backdrop to this sideshow, okay? You have a lot of stuff, the reopening trade in particular, which you want to talk about overextended, got really too long in the tooth, right, on the promise of the vaccine, that needed to cool off. And guess what? They've been cooling off. They've been correcting. All those names that when that reopening trade got hot, went up in a straight line, have been in some sort of corrective or consolidation phase. Okay, so what I'm getting at is it can have some sort of an immediate effect on the overall market in a sense, okay? But the truth of the matter is where the selling, in my opinion, this is not the blow-off top euphoric, GameStop going at 500 blow-off top signal. I think that money can go right back, if they so choose, into these reopening groups and sectors and subsectors off a pullback. And this rotation continuously, just continues to do what it's been doing. Okay, again, it may very well have an effect over the short term. We've been seeing it, right? This market has looked shitty over the last couple of days, right? Especially those sectors I just mentioned. But, as a whole, as far as leading to something of a more disastrous situation, I really don't see it. I potentially see it in the names that are flying right now, without a doubt. GameStop is not going to become all of a sudden the next Twilio. These names, eventually the air is going to come out of the balloon and they're going to crash. Okay, there'll be vicious rallies in between because people are going to try to short them. They're going to get run over. You know the whole deal. We've seen it in plenty of stuff before. But right now, you have retail tipped off, I think, a portion of the smart money to what they were doing, and they're joining the party, right? We see it in sweeper activity. It's not Wall Street bets sweeping the book. You know what I mean? whether it's market makers or players sniffing out what the next short squeeze may be, it snowballs into something bigger. And then when it runs its course, these things will eventually make lower highs and roll over. All right. But at that point, that's why I think instead of getting hung up on, this is not normal, this is scary, what the hell's going on, I don't like how this looks, I think we have to be more focused on where does the sweeper money go post earnings, right? What names are seeing post earnings buying as this little mania, short squeeze mania, runs its course? And I think that's what we got to be focused on and pay more attention to, because it's very easy to get sidetracked, especially with what's going on now. And on top of that, if there is some sort of market weakness, okay? Because listen, if this wasn't here, right? If this wasn't here, if hedge funds weren't at this point here, okay, and they were up here somewhere, okay, I'd be singing a lot different tune, because you would have potentially hedge funds blowing up on any pullback. They're blowing up on the other side right now. You see what I'm saying? Usually you get hedge funds blowing up out of corrective phases because they're over leveraged on the long side. That's not what's going on now. Hedge funds are pulling their hair out of their head because why? They're short and they're getting squeezed to death, and it's not even the overall market doing it. I mean, it really is fascinating, So, like I said, I think what this ends up being beneficial, okay, is that if you do get, and we're certainly due for one, just a normal pullback, I think what we're going to see is they look for an entry into that. Because think about this too. You had a reopening theme that everybody was junked up on, a little too junked up on, okay, and wanted a piece of and was chasing on the way up. Now you're capable of getting off a legitimate breather here, and with the Fed doing what it's doing, right, with no change coming out of the Fed doing what it's doing, another round of fiscal stimulus coming out, vaccine, as shitty as the process has been, in the picture, right? A lot of players out there have their blinders on to the extreme short term and are looking in a post-vaccine world. What the hell does this look like? Okay, the thought of everybody coming their house like gangbusters, God forbid, getting on a plane, traveling with all the stimulus out there, right? And that's a perfect segue for my next prop. All this cash already that they're sitting on, right? Because of the correction in March, because of just being locked in their caves because of COVID, all this cash finally being put to work. You know what I mean? And that's what a lot of major players out there have their eyes and heads focused on right now. Okay? So the bumps and the volatility along the way, we got to make sure we do the same and not get sidetracked and look at, the real market. Like I said, this is all fun. This has been great. I mean, it's for anybody out there who can, I'm sure a lot of you are killing it on the option end too. But, the options right now can be tricky with IV exploding and spreads, ballooning and all that crap. I don't know how some of you do it, but for those of you who can play equity right now, all right, and I hate to say not even interested in the home run because the home run has been there, but just looking to take what the market's willing to give you with as little as, with as least as risk as possible. If you're an equity player, I mean, this is a fun time. This already has been fun up until this squeeze, but now it's just ridiculous, right? You got sweeper activity in names. You're in it 10 minutes. This is stuff I wouldn't see on equity trades. I wouldn't see returns like this sometimes on a swing trade a lot of times. So you can take, if you feel a little uneasy about what's going on, I can't blame you. I certainly wouldn't be swinging options with implied vol the way it is on some of these names. I know they go up every day. I know. The problem is you get out and walk away from the table in time. That's the problem. That's what these Wall Street bets crowd, that's what they're not capable of doing. That's what the retail trader has never been capable of doing. It's like sitting at the blackjack table and you start with $2,000 and it's worth 50. What makes you think that you can't turn that 50 into 200? And by the end of the night, you're borrowing $10 from your friend to get a slice of pizza. You know what I mean? That's what's going on there. All right. So if you take a more prudent approach, a more conservative approach, and you take advantage of what the degenerates are actually doing by tripping over themselves and buying these things up and exploding in seconds, you can make some money, you can survive. And then I think you're able to concentrate and focus on the larger picture at hand. Because again, we don't know. I don't know. I don't know what the post-earnings flow is going to look like when this whole squeeze phase is over. Maybe sweepers aren't piling into reopening names off a pull or anything like that. Maybe the rotation's dead and we do have to go into some sort of corrective environment. That would make sense to me too. But we want to be able to have a clear head and see that. You know what I mean? You want to be able to have a clear head and see that. And I'll tell you what, holding a bag of GameStop and whatever and other names are going parabolic, holding a bag of calls at the end and watching the stock plummet, you're not going to be able to see that. You're not going to be able to see that. So just make sure, and even better, if you've been killing it and you've been swinging some of these names, right? And you made your year already, be smart about it. Be smart about it. Nothing lasts forever in this game. Take a nice chunk of it, put it aside, get it the hell out of there, and play what you're willing to give back. You got to be smart about it. But, and then you can enjoy these type, these type of phases. They don't come around much, right? They don't come around. You got a Fed that's printing money like there's no tomorrow. You don't get this. We may be in 6 months. We may be in a year that's in a market that's range bound and all out chop. And you're gonna wish you locked in some cash here and enjoy this process. All right, so that's what's my interpretation of everything else. I think there are mini bubbles out there. We're seeing it, right? Another spot is like SPAC. I told you guys, like, what's been going on in SPAC concerned me. But now even there, it's not as easy anymore there. You can't just buy any SPAC name and make money right now. There's some that aren't performing that well. You know what I mean? There's got to be losers. That's when you see nothing but winners, you should get concerned because there's got to be losers. And that's what's been worrying me about the SPAC end. It feels like every SPAC that every one of you are talking about just goes ballistic. So we have to see more losers there. And I think once we see more losers there, I think it clears the waters. And then we could participate and not have that concern in SPACs anymore. But a lot of people think they could just buy these SPAC names, hold on, and they're just going to hatch like eggs and they get rich. Listen, it can go on for a lot longer than people think. but eventually the end game is never pretty. And what happens is when you think it's going to last forever, that's when you get destroyed when it finally blows. So there are some stuff out there that mini bubbles, I guess you could call them, right? Mini pockets of heat that get me concerned. But as a whole, right, like the larger names out there, the real names out there, there's been healthy price action. There's been really healthy price action. Every time something heats up to the point where it needs to cool down, they cool it down. They cool it down. I'll give you an example, the financials, right? Like that was the cherry on top. If the financials blew through heat to the upside and went ballistic, then you could say, okay, things are getting crazy here. But what happened? All right, we saw some overheat signals. They stopped like a clock. Boom. Nice breather. We're seeing it. We're seeing it all across every sector and subsector out there. Even some of these EV names, they got hot. They took breathe, and that's the hottest, pocket of this whole market are these EV names. And from here, eventually they're going to have to cool off again. I mean, they probably would have if Biden didn't open his mouth yesterday, but there's a lot of demand there. All right. So here, like, for example, here's something we look at. These are the sectors, right? And we just, again, these aren't buy-sell signals, but we get an idea, right? We look at this every Sunday just to get an idea of where everything is as a whole. And, where opportunities may be, where can we look for some money to rotate into? All right, it gets a little trickier during earnings season, but I just wanted to give you an example here, right? Here's financials. Right? And look, moving back towards neutral, right? That's normal. That's totally normal behavior. Basic materials, right? Commodities were scorching. Basic materials were unconscious. Cooled off, right? Biotech had cooled off, right? We looked at it a week ago. We said, okay, maybe some money moves to biotech now as it comes out of financials and some commodity and reopening names. Now biotech got hot, right? So it's constant moving around of funds. All right. And that's, you heard me say, that's the 2008, 2009 blueprint. And that's QE. There's so much liquidity out there that the money's constantly looking for a home because it can't be in cash. It doesn't want to be in bonds, so it's got to find somewhere to go. All right. So what else we got? Energy, right? Energy was another one. Had a nice rally, right? Everyone's talking about, oh my God, energy, the chase is on. Here we go. Right before earnings, boom, cooled off. Perfect. And then we were looking at this, right, coming into not this Sunday, the Sunday prior, right? What's been the laggard out there? And it just so happened to be for earnings. The market of old, we would always see a pre-earnings run up in big tech and FANG, right? Every quarter, what would you do? There'd be Facebook, Apple sweepers, Microsoft sweepers. You buy the daylights out of them and you hold the piece through earnings or you take your money and run, right? It's been the blueprint trade for years. What do we see this quarter? We saw them have a pre-earnings run up in everything else but tech, right? Everything else, the financials, commodities, everything else but tech, energy, saw a pre-earnings run up and tech got left behind. Okay, those groups that saw a pre-earnings run up got hot, they cool off, and money goes into tech, right? Look already, Netflix, killer, Apple, killer, Microsoft, killer, right? So it's not, I hate to say it's healthy, because when you see the Fed doing what it's doing, I guess it's never healthy, right? But the Fed kind of has no choice here. And this is the way the market is supposed to react to the type of liquidity we have out there, right? Exuberance would be, you see all these major leaders, right, just steamroll overheated signals. That's a blow off top in a sense. That's a blow off top. If you remember, we were kind of seeing it before some of the other corrections in like FANG, right? And those names, right? Amazon would just go up for like 2 weeks straight, and everybody was just trading those names. We're not seeing that. Now we're seeing something completely on the side here, a short squeeze, and it's beautiful to watch. You know me, right? I get the label perma bull. There's nothing I like better than to see shorts who've been chilling for years in short positions and boasting, bragging about their shorts get run over. I don't like to see anybody lose money in this game, but you shouldn't. I mean, the market gods don't go for that shit. You guys know that. The market gods don't go for that shit. You can't come out and brag about how you're short out the eyeballs and name and try to pump it to the downside and then come out the very next day and do it again and keep pounding it. I don't even know how that's legal, but they deserve what they get. Now watch. You'll see. They won't be so eager to brag about their short positions if they're smart, right? Right? They're going to think twice about doing it now. So it's good. This market always does that, guys. Always does that. All right. Something else we didn't have last week. I don't know why, but here are the Goldman, the sentiment indicator rundown. They feature every Tuesday. We look at here. So, pretty much what we've been seeing, right? Every time the market goes to new highs, these things kind of line up. A lot of the short-term momentum, sentiment indicators, heat. And then, these things still down here, very slow to even get past neutral here. Very slow to get past neutral. All right, but a little, again, even a little pullback should be expected. And it'd be a good thing if we get it during earnings season. I don't know if we can get it with the type of rotation that's out there. That's my feeling. You're going to need, you need the Fed tomorrow to really talk down or talk up tapering, which I don't think they have the coconuts to do. I really don't think they have the coconuts to do. But that's the only thing. Because look now, you got the reopening trade. There's some fear there. There's a correction going on in the reopening trade. Okay? So, think about the overall markets. That whole facet of the market right now is in a correction. A healthy correction. What do? They're in tech and they're joining the riffraff in these short squeeze plays, right? EV plays. They're always finding something to get involved in. And that's the stimulus crap. So we'll see. But it would be a perfect time if it did happen around earnings. Because, we don't like to swing through earnings, obviously. And if we do get a pullback post earnings, would be that much more beautiful. And that's basically all I wanted to show you anyway. I posted this on my regular Twitter too. I pinned it to private Twitter and I posted a few times the market updates. This thing has been gold. Did you guys look at this at all? Oh my God. Every name, it's funny, every name on here saw some squeeze sweeper activity at some point in the last 2 days, right? Look at the top names here. And, if you own these, GameStop, Space, AMC, BBB1, oh my God, the blacklist. Even Fubo, SunPower, some of the names aren't even dogs, right? SunPower, that had a big day. I don't know where it ended up. PRTS, you believe this? Look at this. And we like that name off all the flow. Look at that. Unbelievable. It's like they were moving off this list. No? That's what it seemed like. You guys are funny. Stitch Fix, which is a beast, but been shorted because this thing has gone parabolic. Workhorse, what a day that had today. I mean, that thing got too hot at the open. You couldn't even get your hands on it without chasing. Revlon, we saw sweepers in. SDC, I don't know where that ended up today, but had a great day yesterday. All these names, man. All the RVLV. This, you're talking about a beauty of a winner too, this RVLV. Look at this. You guys remember this RVLV? Look at this move from where it was. My God. GME is still moving? Where is it? I don't even see the post. Oh my goodness gracious. It's all the way up here. I said I don't even see the post market price here. Oh my God. Are you kidding me? Who? Oh, Elon tweeted too now? Jesus Christ. So have you guys been you played the options? I'm sure quite a few of you played GameStop. Like, with the implied vol, like what type of move did you need to see, like, to make some money? Yo, Kay, or Trade Alert, I couldn't even see the implied vol. I think it broke Trade Alert's implied volatility. It wasn't even listed anymore. Yeah, crazy. Crazy. But yeah, that's why, listen, if you can play the equity and make sure you play with stops, right? This was a beauty. This came late in the day. You could smell it. And you know what I was a little aggravated about? There was a little sweeper activity starting to nibble both yesterday and earlier today. And I knew it was heavily shorted. I said to myself, should I just buy some and hang in there, and wait for the wave to come, stay loose? And I didn't. And luckily there was an opportunity. I had to pay higher than where I was going to get in initially, but it was well worth it. And here's another one, by the way, I told you guys in the past, they took the stock from me like I was the biggest sucker in the world when I got out of it. They took it from me like, thank you. You got any more? You got any more to sell? Give it to us. When I sold this thing. Every time that happens to me, these things double after I sell them. When you get out too easily, something's fishy. But yeah, even late day, they came back after these things. I wish we had a little more time on this thing. This thing was ready to explode. This ADT. If we had a little more time, this thing was ready to go bananas the way they were coming after it. These names, multiple sweeps like that, they can't handle it. They got shorts out the eyeballs too. Go, that had an incredible move too yesterday. Wow. There's so many, man. There's so many. There's so many. We used to like to look at these short squeeze plays just in general when they would catch sweeper activity without what's going on now. And then maybe you get lucky if they swept it multiple times, you get some momentum and some short covering, and you make a buck. Now these things, they explode. They explode. The morning started off a little slow for me, but then as the day went on, it ended up being a great day for me. Like, I played a couple little guys in the morning. I played Mitt. Did you guys play any Mitt? I know it's a little guy. I played some Mitt just because it was so cheap. Like, what's going to happen to me? That was my approach to it. And they kept sweeping it. And then the other one, believe it or not, that I really liked, even more than just a squeeze play, the way they were buying it, was this AWH. Dan, I play anything that catches sweeper activity. There's no I only play certain things. Whatever sweepers hit, I'm playing. I don't care. They could They can, if they start sweeping Bitcoin, I'm buying Bitcoin. How's that sound? AWH, they bought Febs and they bought Aprils. And I'm telling you, it was a 150 lot accumulation throughout the morning. Like they didn't want to be seen. It'll be interesting to see if this thing catches a tidal wave of buying now, and these guys, kind of snuck in. Because you could see if they really came after this thing, it would have just exploded. It couldn't handle it. So they kept coming in little bits and pieces. And what I liked even better is they went out to April, thinking that this is a little more than just a squeeze play. And look, not a bad look to this stock. Doesn't look like a piece of garbage. Anybody know this name? Women's Health? Somebody mentioned maybe software for women's health. I don't even know. They were sweeps probably 30, 40 grand were the sweeps, dollar-wise. Early detection cancer. And liquid biopsy. Okay. I think I heard someone mention this. Yeah, so if you do get a breather in the next couple of days, keep it on your list, and especially if it catches more action. I wouldn't go nuts chasing a move. Especially the options. They're not too liquid. Yeah, but guys, this is a $6 stock. You know what I mean? When I'm buying calls, I pay $6 in premium. The type of calls I like to buy, right? 23% short interest. Hey, OC, what's up, brother? These I pay $6. I like to buy close to the money options, so it's like buying calls practically. But yeah, I like the action in this name. So I played those two early on, and then the afternoon I got lucky because a couple of them got hot. I played PBI, which I played already a couple times in the past. This thing had caught. Aside from today, you guys remember PBI? We spoke on this webinar about it. It caught a ton of heat twice. And then today they just bombed it. They just bombed PBI, bombed it. Bombed it. Like I had no choice but to buy it. There were a couple names like this today that I didn't buy that I'm pissed off, where they just bombed the hell out of. And I should have just got in with a stop, WWR, I did not play that. They hit that pretty aggressively too. And this has a little sexy story to it too, right? This is the rare earth thingy. Graphite? What's that, graphite? Uranium. Wow. Yeah, so, in batteries, all right, so there you go. It's got the sizzle to it, right? So, yeah, this name caught action late. How about this, right? I mean, just forget about even today as a whole. This is right up there with the best action in names, no? Space, this has been a beauty. Today was just insane. Today, you guys saw the tweet I posted. There was a stretch like 2, 3 in the afternoon. From the open all the way to 3 in the afternoon, they swept it all day long. And the flow in this since that Bova upgrade has never been the same. Some big players in this thing. Big. Yeah, well, look, I didn't play it today. No, I didn't play it today. I haven't played space this whole recent rally here. I played it not even for a swing. I think it was a day trade down here when it first started catching action off the pull, and then I've watched it. Blink, the EV players, I don't know where they get the money from. I really don't. The type of size, they just keep buying and buying and buying. This Blink catches $500,000 sweeps like starter positions. You know what I mean? Nuts. The other one, you got the plug, which is an animal, right? Even this fuel cell they were hitting all day today. The three over there, the three. Just crazy stuff. TPGY, that's the SPAC, huh? I've been staying away from SPACs. Some of them look really good too. I've been staying away from SPACs. This is an EV play, you're right. That's why it was up so much, okay? I like this one too. I like this SPAC. The Aprils, yep, the Aprils. I just saw the SPACs. I was in the equity. If I had calls, I'd probably leave it alone. But I chiseled a lot of the equity in some of these. The risk reversal, I'm not so sure about, but it did catch decent April sweeper activity. This iPod, it did catch legit sweeper activity. But, you know, a couple of these SPACs look shaky a little bit now. You know, just they look normal. It's not that easy anymore, you know? It's not that easy anymore. They're still catching action, though. But I've been I've been hesitant now in some of these SPAC plays. Yeah, they were easy money, guys. You know, I get concerned when they were easy. They were too easy. They were too easy. So if you buy them, yeah, exactly. If you buy them and you have some time to sit through some downtime, if they do go quiet, you know, that's a different story. But for trades, you know, you want to go where the hot money is. You want to go where the hot money is. What else? I'm trying to think of some other names. Throw some names at me. I'm trying to think of some other names to keep it. Yeah, that's one they hit today. Really nice. That used to be a SPAC. No? That's not a SPAC anymore, or it is? I don't know. This was a nice trade. It merged, right. And this thing catches a lot of action. Clove. This used to be IPOB? No. That's open, right? IPOC. Oh, okay. Yeah, a lot of action in this. A lot of action in this. And this, you know, right off, multiple sweeps today, right off of it, you know, just got hot. Look at that. Nice move today. Nice move today. What else? DKNG was up strong off the Goldman note, and then sort of like fizzled out, right? That was the problem this morning. You know, this one I missed. I should have got in for a scalp at least. Workhorse. Anybody catch that off the open? I couldn't chase it. It got away from me. You played it? Yeah. And OT, where are you? I know you've been looking at this name for a while here, right? Didn't you mention this name to me the other day? Off a sweep, I remember that you were in it already or something. Yep. Explosion today. Trying to think of names. Oh, you know what name? Look at that. IQ. Okay, I'm going to get all you ARC fans a little gassed up. She's not buying it though, right? You guys saw the note with the ARC note on VR? Like, this is supposedly one of the cleanest plays for VR in Asia. ARC had a write-up on it. I don't know if you guys saw that post I posted. You know? So since that write-up, it's been catching, you know, nothing crazy, but looks like some players positioning. You know? What worries me about it is, don't they have headaches? Financial headaches? Yeah, this stock burned me a couple times for a day trade. Yeah, last year it was the Netflix of Asia. It got a different nickname. It's a different year now, you know? Didn't they have fake numbers? That's what I mean. Wasn't there something like that came out? So, you know, be careful, you know? Be careful. If you buy options, you put in what you're willing to lose, who cares? But, you know, if it does end up catching fire, right? That VR, what's another play I see you guys mentioning? That VR starting to really heat up. You know what I mean? There's some noise out there. Oh, WIMI. I think I saw a little flow in this. I got to double check. WIMI. Jesus. I got to look. I think I saw it on the unusual activity list. Oh, and Knox. Okay, I know that one. That's, what's that? KNOX? Oh, NNOX? Oh, there we go. Yeah. That caught some action today, too. Knox. I get dizzy with all these names. I get dizzy. I tell you, the mornings, you guys probably too, especially like if you're on private Twitter, just seeing the flow, the mornings are too crazy. I'm not going to lie to you. They're too crazy. I never thought I'd ever see that in my career. I usually complain about a lack of flow when we go through like dead time, right? I used to go through dead periods. The mornings, I can't keep up. You know what I mean? And I'm afraid I'm going to miss something juicy, action. It's just, it's out of control. It's out of control. Yeah, forget about the assistants. I need like extra eyeballs. You know what I mean? It's just the flow is too fast. Like if I was screening for activity, you know, it's a little different, but I'd end up catching it later. You know what I mean? I have no criteria. I'm looking at all of the flow, and you know, mornings, like the last few mornings, oh my God, I need a nap. Yeah, way too fast. I like when things start to settle into the afternoon, and I've been able to see a lot clearer. Does it worry me? You know what? I mean, I think I've come to the conclusion that the option market, like everybody's been talking about the equity market and the lack of volume. I don't think people play equities anymore. Everybody plays options. You know what I mean? Even if you want to take a more conservative approach, they go into the option market and they buy deep in the money calls and they utilize leverage. You know, they don't, the equity market, little by little, you know, has been like a dying breed. You know, you got, again, you know, I go back to my old man stories. You know, when I got in the game, 98, 99, none of you guys could even have access to the options market. You know? So it's a whole different ball game out there right now. You know, it's a whole different ball game. Now you got from retail to algos, you know, going nuts. You know, going nuts. Yeah, well, look what's going on now with retail. You got retail full-fledged in the options market. You know, full-fledged right now. So, yeah, does it concern me that, like, the equity put to call is dwindling down to nothing? Of course it concerns me. But if you're worried about, like, weeding out the froth out there, you need a two-week pullback. It wipes them all out. Retail is in weeklies and biweeklies. They're not out any further than that. No, not just retail. It's, you know, smart money joining in the party. Joey, it's the smart money joining in the party, you know, and now trying to front run some of these retail players. You know, that's what it is. And you got to understand, when market makers, we talk about this, right? That's our edge normally or sweeper activity for day trading. When a bucket of action comes in, all right, think about it like bookmakers. You guys bet ball games, right? Think about a bookie, okay? We got the Super Bowl. New England is playing Kansas City. I mean, New England, Brady. Tampa Bay is playing Kansas City, right? If all of a sudden a ton of money comes on Kansas City, right? A bookmaker all of a sudden takes a ton of money on Kansas City, and he thinks some of that money is wise guy money. smart money that may know something. Okay. He's got to take the bet, right? Bookies, like market makers, have to make a line. Okay. That's what they do. But what they do is they take it and they offset it elsewhere. All right. So if I take 50 grand on Tampa Bay Bucks, right? And I don't want to hold that bet. I go and spread that out between other bookmakers, right? And then eventually the line moves to try to attract money on the other side. Right. That's what the market makers do. Right? They see some action come in, right? So for example, we see a sweep in LUMN. They say, "Oh shit, hot money's coming in on this thing. I'm not getting caught in this thing." What do? They got to hedge off that risk, right? So they buy the stock or buy calls. They do whatever they got to do to offset that exposure to LUMN. And what does that do? All right? That's going to create more momentum in the stock. Exactly. So think about that snowball effect. And now, right, you have where retail money comes in to a heavily shorted name that's been shorted for not a week, not a month, for years. Shorts have been leading into this name, right? Now you got the market makers who need to offset their risk and exposure. What about the hedge funds who are short out the eyeballs? What do you think they got to do? What do you think? They're going to sit there and get run over? You know what I mean? What do you think Melvin and that crowd is doing when they're seeing all this action come in? Right? If I'm short LUMN, I'm like, oh shit, I sweep some calls, sweep the offers. Right? I don't care what you pay, just get me upside exposure. That's what's going on. Crazy, right? But that's, the market makers, like bookmakers, they have to make a market. That's why when you hear, you hear a famous line out there that always used to piss me off because it made no sense. When we used to talk about like Sharpies and sweepers, I always used to get the rebuttal from some troll who's trading like 6 months. Well, for every buyer, there's a seller. No, you moron. That's not how the game works. They have to make a market. Yeah, they're selling, but they don't want to take the other side. You know what I mean? Right? You heard that line. For every buyer, there's a seller. So, but that's what's going on right now. Those are the dynamics. And, with the addition of a heavily shorted position, man, it makes crazy. It's craziness, as you see with GameStop. So that's the story. And I think big picture wise, especially some, maybe you guys, the software names you guys like, if you're fortunate enough to find, pullbacks there off earnings or something like that, reopening trade, especially, you can't let what you're seeing now in these reopening names throw you off whack. If you were waiting for this breather, waiting for this pull, now you're hoping they release their earnings, they come down even more or do nothing, and you see some legitimate betting in there. And that's your entry for swings. That's your entry for swings. That's what we've been waiting for on any of these names, but more so the reopening. AMC, right? Where do you get out if you're swinging these names and you're trying to catch the big move? That's the question. Where do you get out? 660? Oh my God. I don't see the thing here. Look. They're all off my screen. Where do you get out? You know what I'm saying? That's the question. And you think you're going to get out at the top right before it rolls over? I mean, you gotta have a plan like that, Cash, right? If you're looking for a big winner, right, and you're sitting on some gravy, you're up on it, say to yourself, this is where I'm stopping out no matter what. And that's it. You know, you have to. You have to. Otherwise, you got to take the profit and run. You know, because even when you could walk into a gap down and, you know what I mean? Those numbers you see could be gone. So it gets tricky. It gets tricky. You know, who's in the best position? How about that dude you guys have been telling me when we were seeing those sharp sweeps, Mike Berry, right? The guy from The Big Short or whatever he's from, loading up on this thing. What price was that? Mike Berry, right? Remember those sweeps? Where was that? I can't even see it on the chart. Nobody wanted this thing. Jesus, yeah, he's been building a position for a while in this thing. Unreal. You see that? Money goes to money, huh? Money goes to money. Somebody had a question they were saying about a stock. What question's that? The a risk reversal. What was that name again? Starwood. Yeah. What was your question? Money goes to no money. What was your question, Mason? I haven't seen anything. I'll double check. I haven't seen anything, you know, significant enough to catch my eye initially. But again, you know, if you didn't have earnings involved, I would be in it, no questions asked. That's the type of action I like to swing off of. But what concerns me is you have March earnings. They targeted March, and you know, usually if you don't see any, Jules, if you don't see any action, even post earnings, I would say more so than pre-earnings. You know, here's the thing too. For those of you, there's some new members, and because you get, when I say clean, what I mean by clean or not clean, all the action out there right now, okay, whether it's squeeze plays or not, the problem is during earnings season, we don't know if it's earnings positioning or not. Okay, all we know is there's a higher probability of stock replacement and strictly earnings position during earnings season. That's a given. Okay, the probability goes up significantly during this time. All right, so when you guys ask me if it's clean or is not clean, that I'm not even referring to whether it's an earnings bet or not. I'm referring to if it's a roll or if it's tied to stock. You know, because right now we're at the start of earnings season. Almost everything is catching earnings, except for some of these short squeeze plays where they're playing weeklies or some shit. You know, so that's why I keep pushing the post earnings flow, because that's when flow is the cleanest. That's where the real buyers show up. You know, if you got a name, like in other words, if this Starwood is down even $1.80, nothing, okay, and you see somebody post earnings, right, come into that weakness and now open up a risk reversal 5-6 months out. Now you know it's legit, you know? So Mason, that's the thing. Like, I missed many winners because of it, but I also missed losers because of it. And I can tell you there are a lot more losers during earnings season off the size action because it's not legit. You know, like I said, if this wasn't an earnings play, I would have the most confidence that I could possibly have, you know, because bets like that, they don't go down. They really don't. They don't go down when you see a bet like that. But when it's earnings season, you got to take it with a grain of salt. I've been strictly day trading of most recent. I've been playing equity for the most part, predominantly equity for a while now. But I just started day trading, maybe a week or so ago. That's all I've been doing because of earnings season. Because of earnings season, more so than anything else. You know, because of earnings season. See, and here's my mind frame, so you understand why I'm day trading or why I'm playing equity. When I play equity, it's because I'm trading. You understand? When I'm, for example, instead of buying weeklies or bi-weeklies, I play the equity. Okay. What I utilize the option market for is position building with time. I'm an equity guy by heart. You know, I played equity my whole life. Ironically, you know, I utilize flow, right, to play equities, but that's what a lot of you guys don't realize. I'm an equities guy. You know, I've always been more comfortable in equities. You know, that's my game. So, you know, when I'm saying I'm just playing the equities right now, that means I'm trading, you know, but my favorite thing to do is, you know, I'm day trading or tactically trading equity, but I feel confident about where the market is and the flow that's coming into certain names that I'm building positions in calls with time in the option market. You know, so I get the best of both worlds. So that's the only difference. Like you guys play weeklies. You know, I'm utilizing the same frame of mind, but I'm playing equities instead. You know, because I can be quicker. I can take what the market's willing to give me. You know, when you're playing short dated calls, there's a lot of different things going on, right? The liquidity, the spreads, IV. It's tough to do all that on the fly and, you know, pick out great risk rewards in trades. It's not that easy. Yeah, John, I'm most comfortable when I'm playing options. I like to go 3 months and out for the most part. That's when I like to, because then, you know, I don't worry about being early when I'm buying calls, right? If there's any further weakness, I'm looking to add because that's the stuff I have the most confidence in, right? That's the stuff that's the type of action that's the goods. So that's why, you know, I don't want to concern myself with the daily up and down and get shaken out of positions and stuff. So I intend on being early and I leave a little room to add at the least. Well, roll, I got to work. I'm bad. On the exits, there's no rhyme or reason in my game. That's something I've been needing to work on my whole career, and I've botched that. Oh, yeah, that's true. I'm an all or none guy. You know what it is? Like I'll roll and then take some profits, and then I'll be like, you know what? Let me just get the hell out of this whole thing. I'll come up with an excuse to get out. You know, like I got to get in, and when I'm time to get out, I got to wash my hands with it. You know, that's just the way I'm wired, though. That's, you know, some people, you know, some of you are good at rolling. Ranchero's incredible at rolling. Me, you know, I like to buy. That's my favorite thing to do. I think you know, over the years, I've got to where I needed to get to be disciplined on my entries, you know? Yeah, Trey, that's, you know, that's just a simple, solid strategy. You know, eye names and that you like, and on pullbacks, especially if they catch action, you got to be ready, right? Because the stronger names, Trey, they bounce back, right? 9 out of 10 times, especially with sweepers involved. You know, especially with sweepers involved. Yeah. Dan, you got to try a few things. The problem people run into, you know, if you build a watch list, sometimes the names that you're watching aren't going to catch action. And then what are you doing? You know, if you're a degenerate, you're doing something else and it's probably going to cost you money. You know, so you got to find something that, you know, you're comfortable with. Like for me, like I needed a seatbelt, right? I got a seatbelt. You know, my seatbelt is when I don't have the confidence to swing option positions. I'm playing, you know, extremely tactical on equity. You got to have a seatbelt to keep you in check. Yeah, Ani. That's why nobody can tell you exactly what to do. I could show you a way, but it may not fit you. You know what I mean? That's why if you're new, the best advice I could give anybody who's new is, nice and easy. Everybody's in a rush to make money. You got to learn things about yourself. You got to look around, learn some stuff, try some stuff out, give stuff a legitimate shot. I never sold premium ever. I think when I first got into the business, Sean, I wrote a covered call and I wanted to slice my wrist because the stock ripped and they took the stock away from me because I wrote a call, and the person who introduced that trade to me, I wanted to take his life. And then I said to myself, wait a second. I'm capping my upside. I don't care how much you're paying me. I'm capping my big winners. And then my losers, what? They're going to go to zero? Get the hell out of here. So ever since then, I never wrote any premium. And I'm not going to write naked. I'm not structured for that. You know what I mean? I'm not doing that shit. That's too, maybe back in my prime, but not now. Might have a heart attack. Yeah, that's Lucci's game. That's Lucci's game. You gotta have a certain head for it. I'll tell you what, though, you're not going to enjoy the market. You're going to hate the market's guts when you're writing premium naked. You know what I mean? You're going to despise the market. There's no level. I just, it all depends. Like I said, it may not even be the market coming down to a certain level. It could be just sectors of the market that pull back and breathe. Like I said, we'll see post earnings what things look like then. Look around. Look, Boeing, right? Everybody rushing into it. Look. The financials, they're starting to breathe, of solid earnings. So as we get through the heart of earnings season, we're going to see some of these names set up, and hopefully there'll be some solid sweeper activity that comes into them. If not, we got to wait for it. Which cycles? These short squeeze cycles? Tim, what cycles are you talking about? Yeah, they don't. I mean, I'd be shocked if they last long at all. You know what I mean? I'd be shocked. I really would. Yeah, I've been around a long time. But, Tim, that used to be an incredible asset. Now you got the Fed doing unprecedented things. You know what I mean? Nobody's ever seen what the Fed is doing right now. Nobody. You think about what the Fed's doing, and then you talk about what, fiscally, the stimulus checks going out. You talk about a rigged game. They're giving people money to put in the option market. You know what I mean? You never seen that shit before. Literally, the checks are going into the option market. So, this is a whole new can of worms. A whole new can of worms. I would like to see, I want to see what's going to be interesting is when their hand gets burnt. Okay? When they are all in, which they are, and they get run over. You know what I mean? And we get that correction, a nice vicious correction, that lasts a couple weeks, a month. They buy the dip, they get burnt. I want to see what happens at that point, because you got to understand, in 99, 2000, nothing scared them. Nothing scared them when the bubble blew at 2000. They rode those internet names all the way down. Words can't even describe how committed they were all the way down on all those internet stocks. Oh, when they come back, they're going to go to new highs because, there was literally a correction in those things every quarter. Every 3-4 months, there would be a vicious correction. Those stocks would get chopped in half, and then they go to new highs and rip. And then they get chopped in half again. And then they announce splits and rip to new highs. And then they get chopped in half again. And then they rip to new highs. You understand? So when it was all done, when the bubble finally burst, it was a vicious pullback. It scared nobody. Because they said, well, just like the other 6 times, it's going to come right back to new highs. Don't even worry. Buy more. Yeah. I'm in it for the long term. They never wanted to sell. You understand? That wasn't never part of the plan. They never wanted to sell. They thought they could hold on forever and just become extremely wealthy. And the sad thing was, Tree, that so many of them did become wealthy on paper. You know what I mean? Extremely wealthy. And it just evaporated. They never pulled the plug, man. Because they were so trained. The market trained them well. It trained them to just hang in there. If you hang in there, 3 months from now, your account's going to be double. Just hang in there. So are we at that point yet? We haven't even seen a poll. You know what I mean? We haven't even seen a poll. Like, can you imagine some of these names getting chopped in half? Can you imagine? Like, you'd have a lot of hurting out there. I want to see how they react. Yahoo, right? Yahoo, CMGI, all these names, all of them. What we're seeing now in GameStop, there was how many of them, George, back then? Right? How many? For the one GameStop we're talking about right now, right? Me and George could write down a list of 100 names. 100 names. Yeah, Zach, every pull is being bought because you don't have, here, look, you know what I mean? This is what we're talking about with this. Like, here's the problem. You understand? If you get, let's say, even a 5% pullback, okay, the likelihood is, and this is big money, the hedge funds, they're not gonna buy that with the Fed doing what they're doing. That's the thing. That's why these dips get bought. These guys don't have all-in exposure. You know what I'm saying? So, like, when the market tops out, usually everybody's all in. There's no more buyers left. Right? There's no more, nobody's concerned about anything anymore. And we're not there. We're not there. Like I said, we got to get a correction first. We just got to get a freaking normal little correction first. Yeah, we got the Fed tomorrow. Like I said, I don't think he has the coconuts to get frisky here. But if he does, we may get it, right? We may get it. They're in a tough spot. They know there's pockets of froth out there because of what they're doing, okay? But what's more important, right? The little bubbles here that the market will probably take care of itself, they'll blow them up. Or, you got the economy and COVID. Like, are you going to get frisky here and send things into a 2018 style drawdown? You know what? That's dangerous with the economy where it is right now. You know what I mean? You can't afford to do that. I don't think they can get cute. Yeah, I mean, rates. you know, and you got rates have been creeping up a little bit, right? So I think they get concerned when inflation really, really takes off. Not like we're seeing now. I'm talking about really takes off. But we'll see. You can't forecast too far down anyhow. We got to see, trade the day in front of us and see where we're at, you know? Yeah, and I've been hoping for a pullback or a correction for a while now, but you know, I'm being honest, for a while now. I thought the one here before the election, I thought would get a little more dicey and would set up something nice. But it ended right at the election, you know? I'm hoping for this. This is even this, right? I'm not even hoping for a deep drawdown. I'm hoping for some consolidation. I think that's possible. That's possible, right? Because you have hedge funds not all in, so maybe the drawdown can't be that deep, but you can get something like this and you can wash out some riffraff heat too. That's what I'm hoping for. Yeah. The rotation. You know what's funny? If you look, I had it somewhere. If you have a 2009 analog, right? The rally out of 2009, right around here is where we got the first legitimate pull. Right around this period, right here. If you look out the rally 2009, almost identical to this rally. It's scary. Scary. And literally, I think it might have even happened already, to be honest, by a day or two. Here's where the pull happened. You got a decent pull. I got the analog chart somewhere I was looking at. I'll show you guys. It's scary. You know, and that's QE. That's why it looks similar. You know, QE. Rig markets, man. Yes, good point. Bova had a nice note on that. February is historically when, you know, if there's some froth out there, it will get washed out. But again, I don't think we don't want to get too bared up. You know what I mean? We don't want to get too bared up. You know, we want to look for maybe we need to be a little patient, but we want to keep our eyes open to opportunities in names, not even the indices. Forget about the indices, right? I mean, we already seen hard evidence that we don't need the indices to make money on the long side. We got to look at individual names and sectors and what they're buying, you know, what they're getting aggressive in. So that's what I'm, yeah, the rotation has been an art, right, Theodore? An art. It's masterful how they do it, right? It's almost like it's rigged how they do it. And they keep the indices, all the indexes like this up. It's amazing. It really is. It really is. So we'll see though, right? We want to be smart here. We want to take advantage of some of the momentum out there, and it is rigged, guys. Don't be afraid to admit it. It's a rigged game, you know, but you know who the stupid ones are? The ones who aren't participating in making money. I mean, that's the most idiotic thing, right? The bear who's trying to short a rigged market. Is that the guy who, I mean, come on. You know, acknowledge it's rigged. You know, like I said, be prudent about it. Be smart about it. But, you know, try to take advantage of it. Don't go against the grain. They're nuts, these people. All right, ladies and gents. Yeah, you're right. It's the ego. You're 100% right, Tim. They got to be different. That's what it is. Always a pleasure. All right. Hopefully we have some fun. Tomorrow should be exciting no matter what. We got the Fed. Always an exciting day, all right? Good luck out there. Stay safe. I'll talk to the rest of you tomorrow.